The Federal Reserve cutting interest rates by 25 basis points today. Obviously, the markets took a bit of a hit after Chair Jay Powell dampened hopes for further rate cuts later this year. Let's head to Washington, D.C. right now, where we have Yahoo Finance's Brian Cheung standing by. Brian, I don't know how long you've been able to be listening to us here. Brian Sozzi doesn't think Chair Powell did that.
A lot of feelings, I can hear it.
That great of a job. You were in the room, though. Do you feel that his message was clear in there?
It seems like not really, and that's kind of what I tried to get at with my last question, actually the last that he took. I tried to ask him, what is the challenge of communicating these two things that are kind of contrary to another? One being the fact that they still see a favorable outlook. He made that pretty clear in the beginning part of the press conference, but also saying at the same time that there are enough downside risks that they need to cut rates at the moment. So he basically said what he reiterated at the beginning of his press conference was that there's really two portions to think about this. The first being that the U.S. economy is looking pretty good. The data since the June meeting have shown that, but they need to cut rates because of the issues abroad. Now, whether or not you agree with that is one thing, but it is kind of a communications challenge as we've seen markets get really jittery in the past few weeks. One example being New York Fed President John Williams speaking just before the FOMC blackout period. Again, that's the 10 days or so leading up to a Fed meeting where officials are not permitted to speak publicly. And markets basically got really excited on the idea of a possible 50 basis point cut when, in fact, he was talking about academic literature. So you can see the jitteriness of it. And Powell trying to communicate that, look, we don't have a commitment to what the next move might be. In the June meeting, they signaled very strongly that this 25 basis point cut was going to come. They delivered on in this meeting, but the next steps are really quite uncertain. And that uncertainty is probably why you're seeing some of the market movements today. What's interesting is that we tried to ask him, the press corps being, about what the next step might be. He said that in the lengthy cut, this doesn't lead to a lengthy cutting cycle. And it seemed like he was talking kind of longer term about that. He said that's not what we're seeing now. We don't see a period of cuts over a long period of time. But then he ended up backing it up later by saying that he didn't say that that's just one cut for the time being. He likened it to what was the 1995 period of time where the Fed actually cut by 25 basis points and then again by 50 basis points to avoid a recession. A recession didn't come until the late 90s, early 2000s. So kind of interesting there. But again, markets and everyone else kind of just wondering what is the next step from here.
And Brian, outside the Fed rate cut, Chair Powell also threw some shade at Wells Fargo. And if you're a Wells Fargo investor, you probably did not like what Jay Powell had to say.
Yeah, well, obviously, Wells Fargo investors have been thinking for a long time about when the Federal Reserve would lift its asset cap. For those who are not familiar, in February of 2018, because of all the customer-facing scandals that they've had, the Federal Reserve basically said you cannot grow, which means you're probably capped in terms of your loan pipeline and the ability to grow other types of businesses or M&A, for example. And so that asset cap has been strangling the company for over a year now. And the question is whether or not that cap will get lifted at some point in time. A reporter from the American Banker asking Chairman Powell if he would lift it or if there was any hints about the progress that Wells Fargo has made. And his language basically sounded like they weren't really on the path to fixing that anytime soon, and that the Fed and the other policymakers have not really seriously considered lifting that asset cap at this time.
Cheung, it's just so funny to me and strange how much assumptions dictate everything when we talk about the Fed now and Jay Powell, because a few weeks back when we heard something from him that indicated we would get a cut in July, that alone was enough to send markets off to the races. Stocks were higher. Everyone said, oh, great, we'll get the cut. Now, simply because people got ahead of themselves and assumed, oh, 2, 3 cuts this year, and now simply because we get an indication that maybe we won't have additional cuts this year, now we're down. And so you wonder if this might change soon enough and how much Powell is to blame for steering that conversation that way.
Definitely, and it shows that the fact that markets basically called this cut. Keep in mind there was a 100% chance heading into this meeting based on Fed funds futures contracts that there would be at least a 25 basis point cut. We got that because of the strong signaling that they had in June. And that was a little bit easier for them to signal at the time because the data between the May meeting and the June meeting had indeed deteriorated, and they said that the economic conditions did warrant possibly some sort of accommodation in the future. But where we go from here becomes a much larger, wave of possibilities. There's really not so certain about to what degree of data dependence the Fed will go, depending on what they see in future jobs reports. We're actually going to get one on Friday. There's going to be a number of other interesting developments on the trade front, especially as the U.S. and China try to continue negotiating a deal in the future that could provide either a headwind or a upside potential to the economy as well. So as we get into the next meeting, which again will be in mid-September, there are a lot of these questions about what the Fed will see next, how they'll move, and more importantly, how they'll message that. So in the coming weeks, as we get more commentary on what exactly happened in this meeting, hopefully we'll get a little bit more clarity on what the next steps are. But again, there's a bigger multiplicity of ideas here. Keep in mind that two Fed officials, Esther George and also Eric Rosengren from the Kansas City and Boston Feds, respectively, did dissent on this meeting. So their commentary is going to be very closely watched, as well as we've seen that an increasing amount of people on this voting committee continue to be divided.
So we have a jobs report coming out on Friday. Does the jobs report matter anymore? Is that something the Fed's going to pay attention to?
And that's definitely a question that's been raised since the last meeting. If you think about the fact that since the June meeting, we did get a June jobs report that showed pretty impressive gains of 224,000 jobs compared to estimates that were well below that. That seemed to submit that the labor market was doing really well and that maybe this economy doesn't need any sort of accommodation. But Powell kind of shied away from really touching on the labor market beyond what was said in the statement, really focusing on the inflation angle of things and then also the geopolitical concerns abroad. Now, obviously, we got an ADP report this morning that does, generally kind of just give you a little bit of a preview for what we might see in a jobs report that comes 2 days after that. And the ADP numbers from this morning looked pretty good. So you do wonder about whether or not we will get another good jobs report on Friday, which reflects the month of July. The questions will remain: how much attention does the Fed give that as we head to the next meeting, and whether or not, even if it is an upside, will that change the idea of whether or not the Fed wants to continue accommodating policy or not?
Brian Cheung in D.C., safe travels to you. Talk to you later.